Heidi ho, everyone, and thank you for joining me for another Sunday market update. My name's Geoff Pyne, and I'm a senior trader with Actions to Wealth who bring you this show each and every Sunday. I'm super glad that you're with us. Going to do a little bit different this week than I would normally do, but mostly it'll all be the same, and I hope you get something out of it. If you would like to ask some questions, then please do so. I will attempt to look at them, and I'm trying to do that now, get the chat box up somewhere, and that's proving a little bit difficult for some reason. Interesting. Hang on 2 secs, and I'll see if I can fix that. Okay, chat, chat, chat. There we go. Don't know why I can't see it. I'll just move it to another screen and hope that works. Hmm. Good luck with that. Gee, I hope you're well, guys, and I hope you had a nice week. I hope you had more winners than losers. I hope your health was good, and I trust the week ahead is going to be good as well. Let's dive in, shall we? And I'll attempt to impart some knowledge that I've gained over the last 17 or 18 years of trading, and hopefully share that to you. All right, I believe. No, I can't do that. Goodness gracious, that's annoying. I will share screen imminently, guys. Please bear with me. It's not being very, very cooperative. Okay, here we go. You should now be able to see which screen. Good choice. We'll try that one. Guys, please tell me you can see something there that resembles a big picture with a lens looking down the barrel of what appears to be. Let's go with Milford Sound. Why not? Can see? Awesome. Thank you for that. Sam, are we seeing the presentation view or the presenter's view? Can you just help me with that? That would be good. In other words, two screens instead of one. Okay, happy days. Righto. Well, what I'm going to do today is talk about the big picture. And when I started trading, you need to do another something or other. Why can't I read all that? Another unique link. I don't know what that means. What's another unique link, Sam? So is everything okay? Is the big picture up on my, is the slide presentation up? That's what I need to know. Otherwise, I can't progress. I'll continue as though it's there. Nobody seems to be telling me that anything different. Tell me again, I did not get what you said. Oh, okay. All I need to know is the slideshow that I'm presenting visible um, in slideshow mode, not presenter mode. In other words, you can't see it is visible, but only one screen, not my notes or anything like that. Cool. Thank you for that. Righto. So what I was saying, sorry guys for the delay. As you can see, I'm technically inept and just don't know how to drive this control panel anymore. So what I was about to say is when I first started trading, I used to look at two charts only, really, the 30-minute chart and the 4-hour chart. And the reason for that is that's how I was taught. I was taught by a guy who, remained a friend for quite some time. And his method of trading was on 30-minute chart on one currency cross and 4-hour chart on two currency crosses. And that's how I learned. So really, that's all I did. Can I try again? I made the setting multiple share screen mode. I'm not sure what's going on, guys. My apologies. I'll try and share again. Okay. Sharing that screen. Hopefully it's the same. Tell me if it's wrong. Sorry, guys, for the technical mishaps. As I said, I'm old and and don't do this very well on a operational basis. So anyway, what I was doing is really just opening my charts and looking at 30-minute chart and going, well, oftentimes I was going, hmm, I don't see anything here. I don't see any directional bias. I don't see any setup. I don't see anything that I can do. But I still traded because, you have to trade, don't you? I didn't know in those days trading wasn't compulsory. Instead, I just used to trade. And of course, that led to many bad decisions. And what I then learned was, why don't you just zoom out a little bit and have a look at actually what's going on around the place before you make a decision on which direction you're going to trade, number one. And number two, um, timing your entries and looking at how the market was actually working in a technical fashion. I'm not a fundamental trader by any stretch of the imagination. Yes, I do listen to the fundamental experts. I'm far from that, and I don't even bother with it, frankly. I actually pay someone to do that for me. And I think that works perfectly for me. I don't have to worry about it. I've got professionals that do that. So what I actually learned from zooming out was that I could get a far clearer picture of what was going on in the actual movement of charts or chart movement and potential directional bias. I also learned that chart patterns, and I use chart patterns all the time, chart patterns like triangles, double tops, lower highs, higher lows, um, rectangles that I use all the time, certainly channels that I use all the time as well. They are far more pronounced and far more meaningful on a bigger time frame and give me a far better overall picture of what the market's doing rather than what shorter time frames can tend to do. If I only look at shorter time frames, it can put a bit of noise into the equation, and that's not what I need. I don't need noise. I need confidence. I need the actual plan that goes with, yes, this is the direction I need to trade. So the larger time frames and the bigger picture actually give that to me. Before I go into depth of that, and before I give you a deep dive into that, I'm going to share two trade setups that I'm going to take tomorrow morning, providing that the market doesn't gap incredibly. Hang on, I'm getting some messages here. I better just make sure that they're not emergency from Sam, who's trying to tell me that something's wrong. No, everything seems okay, coming from other places. So, what I'm going to do is show you the two charts that I'm talking about. There's number one, and this one's not for everyone. And the reason for that is I'm actually trading a monthly chart. Trading a monthly chart, not just looking at it, I'm trading it. And the reason that a lot of people won't be interested in that because it does tie up capital for a certain amount of time. In fact, that can be a prolonged amount of time, and the spreads can eat into your profits. In this case, this is oil, XTI versus the US dollar on a monthly basis. And the spreads on that aren't too bad if you're going long, not too good if you're going short, but they're not too bad if you're going long. So what I intend to do tomorrow morning, given, as I said, that the spreads aren't ridiculous and the market hasn't gapped too far, so I'm going to put an entry above monthly chart. I'm going to put an entry above this seller bar, and I'm going to put my stop loss below the swing down here, which is also below a horizontal level. I won't give you the exact entries, but if you open your monthly chart, you'll see roughly where they are. And I'm targeting pretty much 1 to 1 here. It's a little bit better than 1 to 1. My target is at the two highs here. Sorry about all the noise. I'm getting lots of messages. So, that's a rough guide. Let me see. What's that? 90 to 50 area around that. That's what I'm targeting on oil. And the reason I'm doing that, I will get into a little bit later, but in my world, it's giving me two signals. One is a false break of that horizontal, sorry, of that trend line, which is a support trend line. So support has been broken. We've had consolidation below that support level. In other words, the market's had a little bit think about what it's going to do. It failed in the first instance trying to burst above that support level, but interestingly closed exactly on that support level. Then the next day it gapped up a little bit. Sorry, it didn't gap up. It rallied up a little bit and then got smashed back to this support level. And you can see that support level through there's reasonably strong through that zone, that blue zone that I've shaded in there. My contention would be that if price is to come back and stay back above this level, this horizontal level here, and the support level that I've got a trend line on, I want to enter the market here. And I've also got, those of you who are familiar with slingshot chart patterns, I've also got a slingshot candle pattern sitting here on this trend line that is the resistance trend line. So I expect if price comes to here, it's going to break out here and go to that level at least. It may go further, but I'm not interested in going further than that. I only want to take the profit here. If that is to trigger, indeed, and don't forget, of course, we are in a downtrend. We're getting lower lows, lower highs, lower low here, lower high here, lower low here, lower high here. I'm expecting that will change, however. So it's a contrarian trade. It's contrary to the trend, but I do expect that if price falls away, as with the trend, that we won't be taken into the trade. So therefore, I'm going to enter here. I'm going to put my stop loss well below the swing, and I'm going to take profit here. What I'm going to take in profit is $0, but I'm going to move my stop loss, pardon me, at that point to here below the first swing because that will become a swing. So I'll just move my stop loss up to here, reducing my risk and take profit here. So that's the first trade I'm going to take tomorrow morning. The second trade I'm going to take tomorrow morning is on the euro dollar. This one on a daily chart. And what I'm looking to do here is very much the same thing, except standing on my head. This one's an upside down version of what you just looked at. So what I see here is a resistance trend line, and I see that it's a little bit messy through here, I must admit. So it's not a perfect trend line anymore, but it is or was very strong in the first instance. And this break and retest of that trend line is also very strong indicator to me that if price were to go short underneath this bar, it will keep going. The benefit is doubled here, or the signal for me is doubled here by this trend line, which has been broken and retested to the pip perfect. And if you were really, really brave and you were absolutely on board with a euro dollar short trade, you could probably enter pretty much now at this point and gain all that momentum as it comes back and takes out my entry. Stop loss on this, I'm prepared to go a little bit above the trend line here, which is also this resistance level, form of support through here as well. I think the stop loss above that makes perfect sense. So just above the open of the week before last trade, Thursday's bar or candle, and my entry is below Friday's candle by 5 or 10 pips. So just giving that a little bit. It's also giving me what I call a game changer bar. Those of you who are familiar with a game changer bar, It's giving me that. It's giving me a lower high. It's giving me a lower low. So I do anticipate that this will continue short. And this is also based on the big picture. So let's go back to the big pictures where I started this some time ago. I've been banging on about this every time I come onto this show, guys, about the Trump thing. And I'm sure you've noticed that Trump is doing more than having an influence on the market. He's dictating the market at times, and the market is responding to whatever he does. Nothing new in that. And that happened very much in 2016 to 2020 when, well, he was Elon Musk's friend at that stage. That's an on-off relationship, of course. But every tweet that he would make, the market would move. And nothing really has changed. He just goes off and on a tangent and away he goes, makes a statement, and the market responds. Makes it very, very tricky to time your entries and exits, I've got to say. But what I can glean from that is in the 2016 election, here's what happened. Um, the market was on the way up after the election, and as soon as he was inaugurated, the market had a slight rally and then it fell away very, very quickly. In 2024, this was the election, this vertical line here, and this was the inauguration. This is the dollar index that we're looking at, guys. So the dollar against all, well, not all, but a basket of the major currencies. So very, very strong indicator. In my humble opinion, it really does, the market that is, really does depend on what the dollar's doing most times. That is for now. It may not be in the future, but for now, that is still the case. So I looked at this, back in, well, November of 2020. Let's go forward. Oh, let's go back months before that because I thought, well, wonder if what happened last time is going to happen again. And what I'm seeing so far is very, very much the case that what happened last time Trump got elected is being repeated. And when I look at this green section here, I see it almost duplicated in this area here. If you imagine, you don't have to imagine, if you look at it, you can see that you're probably not seeing my cursor, guys. Sorry, I'll fix that. And if anyone's chatting to me, I can't see that either. So apparently nobody's chatting to me, which is okay. Let me go through this. So this green area here is almost replicated over here. It's very, 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 very similar. And if you look at what happened post the election, here's the election. Market went up, topped out, inauguration, market rallied back, gave me a lower high and tanked. Here, market was on its way up. Here's the election. Result, a little bit off, but rallied until the inauguration in 2025. We've just seen this happen and nothing has changed. The market has fallen dramatically. Of course, Trump wants lower interest rates. And of course, we're seeing that in the dollar tanking. But the most interesting part of this isn't what's happening now. Once it broke that range, that was broken to the upside, range broken to the upside, back to the bottom, broken to the downside, rally to retest that breakout, broken to the downside, rally to retest that breakout. Then the market fell away and consolidated. Market fell away and has consolidated. Does this look does this look familiar, guys? Really? Does this look like we've seen this before? Well, in my humble opinion, yes, it does. The only thing that concerns me somewhat is that um, the retrace or the second leg of the down move was pretty much far greater than what we've seen already. The thing that encourages me here is that we're following this channel to perfection. And I pointed this out to you guys probably two presentations ago, where we had this consolidation area and we're up the top here. And the obvious direction for me was that we're going to go back to the bottom of this range, maybe break it. And if we did, we're going to the bottom of the channel. That's exactly what's happened. What is more interesting than I've just described is this beautiful reversal pattern or potential reversal pattern we've got happening here at this support level. The support level being the bottom of the channel. It's a classic double bottom. What I can't do right now is enter the market on the back of that double bottom. Well, I can, but to me that's risky. What I need to see is price maybe even break this high, then come back and retest this trend line. So I want price to rally here, then retrace, give me a higher low off the back of the double bottom. If I were to see that, then I'm more than happy to trade anything against the US dollar short. How do I actually work that out in my brain, given that everything is pointing the dollar low, apart from history, I suppose, um, is something that I struggle with. But if I see the chart pattern, I'll trade accordingly. So that's the big picture here right now. The big picture here right now for me is dollar is about to strengthen on the back of this double bottom. I can't guarantee that. Well, I can never guarantee it, but I can't trade that in absolute confidence until I see a higher low. So I'm not seeing that on the week on the month. Sorry, this is the weekly chart right now. But what I would do, as a matter of course, is go to, naturally enough, or in my world, the big picture to give me another tick. In other words, another reason why this can go, why this US dollar can go long. The euro dollar chart, which is pretty much a proxy for the dollar index on an upside down basis, is showing me potential that that is going to be the case. Are we there yet? In the famous words of children in the backseat of the car. Are we there yet? Great question. This level here that I've got on my chart, the horizontal level, is telling me maybe we are. This little area here is telling me maybe we're not. Does this look familiar over here where we've had a high test bar? What is it testing? Is it testing the horizontal level? Yes, it is, most definitely. Is it a false break of the most recent range? Maybe. Do we need to go to this trend line before we see the reversal? Maybe. I don't really know. What I have to do is look at my smaller time frames. But the bigger picture is saying to me that there's not much left in euro dollar upside before we get a reversal. That's what I'm seeing. And if we include this range into that picture, then maybe we're looking at this trend line as the harbinger of doom for euro dollar. I'm not sure that that's going to be the case, but that's what I'll be watching. On the flip side of that, yes, we've got a good reversal bar here. And if we got a lower high in this instance, as I described on the US dollar going higher low, then I would be prepared to trade this short, no problem at all. But am I prepared to trade it short now on the back of that reversal bar, in my world, a game changer bar, in its current position? Well, maybe I am. Here's what I would do. I'd go to the next time frame, and guess what? Here's where I came up with the idea that maybe we're in that particular circumstance. The weekly chart is showing me, again, a game changer bar, as I call it, at that line, but this time we've got an ascending channel on the weekly chart. So we've got double trouble if you're a buyer of euro dollar. And I suspect that maybe this is the time. It's certainly the first attempt, and it's certainly the first opportunity that we've got to trade, or that I've got to trade it short. So the weekly is agreeing with the monthly, and that's cool. Let's go to the daily and see what that's telling me. Daily's telling me exactly what I explained to you before, that we've got a potential false break happening here. We've got the reversal bar, we've got a lower high, we've now got a potential, well, it will become a lower low at some stage. If not here, then here, who knows? But at this point in time, we've got the opportunity to go, well, okay, if we're wrong here, then price should continue higher and challenge the high again. But if we're right, then price will continue now on this nice little down leg, and we've got to get some profit in the bank before we hit support, blah, 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 blah. The rest you know. So that's why the monthly agrees with me, the weekly agrees with me, and the big picture on the US dollar agrees with me. And that's why I'm happy to trade euro US dollar short right now. Would I be putting my house on it? No, I would not be putting my house on it. But guess what? If this does reverse and gets through support, it's going to come back and retest it. It'll give me another opportunity to add to the position. And therefore, my house is not at risk and I can make plenty of money in this area here. So there's the theory, guys, on euro versus the dollar short. It's very much the same on oil long, um, except that oil versus the US dollar is a different beast. Oil's got a world all of its own, of course, and going long against the dollar versus oil is no problem at all, because it's not a contradiction of euro versus the dollar short, in my humble opinion. So there's the two trades and why I've come to that conclusion. What about the topic of the month, week, year, decade, millennium? Maybe. It's gold. Every single person is talking, every single trader is talking about gold. Let's have a look at it. This is gold on the monthly chart. Wow. Just wow. What a skyrocket. Has that been ever seen before, in my humble opinion? No. Certainly not on gold that I'm aware of. That is unbelievable. That's Elon Musk would be proud of that. Any NASA would be proud of that rocket launch. It's amazing. There's also a lot of speculation going on as to where that will end, where it will reverse, where we'll get a retracement. I know the guys who trade gold are having absolute ball. If you look at this chart, where you're going to enter, impossible. If you're looking at it on a daily chart, maybe in a 4-hour chart, hourly chart, you'd be having an absolute ball with this as long as you're getting your stops in the right place. It's just unbelievable, incredible. What I've learned about, and I'm not a trader of gold, I'm a holder of gold, and more than happy to see this happen, of course. I'd like to be trading it, I've got to say. I would much rather be trading it and holding it than just holding it, but I've never been a gold trader really. But I'll tell you what, I've got an opinion based on what I'm seeing at the moment. And it's not to do with the skyrocket approach. What it is to do with is time and chart patterns. I'll share that with you. Here's what's going on in my mind. In my mind, it took 10 years for gold versus the US dollar to rally 533% or $1,600. Now, I know this is it's really, it's apples and oranges or whatever it says. Yeah, look, maybe the party's over. Maybe it is. I think for a short time, that will be the case at some time. I'm not sure when that time is. But it did take 10 years for gold to rally $1,600. And as I said to you, I know pro rata, $1,600 is a different value, right? But bear with me. In 1.5 years, so from here at this breakout point, gold has rallied $1,600, which is only an 84% increase versus a 533% increase when it did it the first time. 533% when it went from here to here in 10 years. In 1.5 years, same dollar value rally has only proven to be an 84% increase. Skyrocket, unbelievable skyrocket, but 84% versus 533% in a 10-year period. So my brain goes, okay, if that's happened so fast, something has to slow it down. And I still believe that's the case. I've got no idea what that is, frankly, at the moment. Are we going to have world peace? Is Donald Trump going to die? Oh, sorry. I think they'll shoot him once again, but that's my opinion. And not my wish. That's please be please be aware of that. But to obtain a 533% rally, the same as it did here, so measured move is where we've gone through already at 84%. 533% rally takes us to $10,127. Now, am I predicting that? No, I'm not predicting that at all. Am I saying that history repeats itself? Yes, I am. I am absolutely saying that. So it wouldn't surprise me if that occurs. Is it going to happen tomorrow, next week, next year? I don't think that's even a possibility. But I do think if you look at history and see what has happened now, you would have to say that this is overbought, right? And to deny that, I think you're dreaming. How do we take advantage of a retracement here? Well, you've just got to wait. Like I said before, the big picture will tell you ultimately the problem that we've got here is we've never been here before. So the big picture is very, very difficult to, from a chart perspective, the big picture is very, very difficult to draw on a chart. I can't give you anything here right now that is suggesting to me that we've got even a pullback point unless we come back to the breakout area. Do we see that happening? Do I see that happening? No, I don't see that happening because the world's not going to change that much in at all, I don't believe, much less in a short period of time. So the other thing I wanted to point out to you is, and this may help when you're thinking about how to trade gold, it is very, very predictable in terms of when it breaks out of a consolidation period. If you look down here, gold tried once, twice, three times to break out of this range before it did. When you look here going the other way, it tried once, twice, three times before it did. When it broke out to the high side, it tried once, twice, three times before it did. When it broke out of the last skyrocket launch pad, it tried once, twice, three times before it did. There you go. So that is my little area of interest, if you like. If I see gold reversing, I'll be looking for one, two, three attempts before I even think about trading it short. Fading it, yeah, no problem, but I'd need to see a double top, head and shoulders, something like that, and a lower high before I tried to fade it. Where are you going to fade it to? Great question, as I said before. So anybody's guess as to where this stops and comes back, but those are the sorts of things that I'll be looking at, and I hope that gives you some idea of where my head's at anyway on the gold scene. Before I before I leave you, and I'll just share a couple more things with you in terms of how do I come to, yes, I've got the big picture, but what do you guys do? And I alluded to this earlier on when I said I used to open up my 30-minute charts and my 4-hour charts and go, well, what am I seeing? Is there anything here that I can trade? And maybe I saw something that I could tick one box out of it and trade it, which is bad form. You just shouldn't do that. Have you guys got a trading plan at the beginning of the week? Look how many yeses I've got in the box. Zero. Interesting. I would, I'm just going to share this with you. Take a screenshot of it if you want it, but it's got nothing to do with anybody except me, really. But this is my weekly thing. That's what I do each and every week. And you know, these things don't mean anything to you guys, but I've actually got something that says on Sunday morning, 8 o'clock, that's what I should be doing. Am I guilty of not doing that at times? Yes, but at least it's there to keep me in check. I've also got this here on a Monday morning or a Sunday morning. Um, I mostly do it on Monday, I must confess, because I like my Sundays. I've got a list of things that I need to do before I come to a conclusion or actually get anywhere near trading in the market. So I just wanted to share that with you guys because it's something that isn't taught a lot as far as I'm aware, that you have this tick, 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 tick. Have I done that? Have I done that? Have I done that? Have I done that? Rather than just opening up a chart and going, okay, 30-minute chart, this pattern looks good, let's trade it. Lots of mistakes being made by myself by doing just that. So I would encourage you to have something like this, a spreadsheet or just a list, pin it to your monitor if you want, that says, here's what I should be doing each and every day, um, and go from there. Just wanted to share that. The other thing I wanted to share with you is something that I used to do in a show Ash and I used to do called Trading Buddies. I'm sure some of you in the room would be remembering Ash and I doing Trading Buddies. So I used to have a little segment that I thought I'd share with you tonight, or my night, your day. I don't know what. Oh yeah, it'd be nearly night where you guys are. I used to call it things that keep me awake at night. And it was just a fun thing that I did. And I thought, well, I might share it with you guys as well. I don't mean for you to stay awake tonight and think about this, but maybe it's worth just having a little thought about. One of those was, which letter in scent, SCENT, is silent? Is it the S or is it the C? You don't have to answer, guys. It's just a fun little thing that I do. Oh, is that right, CK? S, S. Is it? Could be. Could be. In 1925, this is interesting, everyone had horses and only the rich had cars. Is that true? I think it is. But 100 years later, in 2025, everyone's got a car. Well, not everyone, but most people have a car, and only the rich have horses. Interesting. But what about this one? If you replace the W with a T in the words what, where, and when, guess what happens? You have the answers. That, there, and then. That's exactly where I'm going to leave you tonight, guys. Those are the things that keep me awake at night sometimes. I hope you have a wonderful trading week ahead, and I'd like to thank you very much for attending our Sunday market update. Have a great week. Thank you, Sam, for looking after me, and we'll bid you adieu.